Hi everyone, this is Rob Roy and welcome to the LA Wave Options U.S. Market Update. Well, interest rates backed off a bit this week, moving back below 3% on the 10-year. That set the stage for this oversold relief bounce that occurred on Friday. We've been talking about it for several days now. Is that the end of the selling? Does the relief bounce have legs? We'll talk about it. And what an ugly week in crypto land. How low can the cryptos go? Let's look at the charts. At the time of this recording, it is late on Friday evening and the futures market is closed. Before we look at the charts, please don't forget to hit that like button, or better yet, hit subscribe and you'll be notified immediately when one of these videos is posted. You know the drill. It's helpful and we appreciate it. Taking a look at the charts, you can see the market did give us a bit of a relief bounce today. That's going to be a common theme throughout all the charts that we look at. The question becomes, we bounced from oversold conditions, but how far can we go? Well, one of the oversold conditions was rectified today. When you can look at the low from Thursday, you can see there was good separation between where we were and the 10-day moving average. And with the bounce that we got today, we're already right back to the 10-day moving average. So is that it? Is this going to be just like on Fed Day where we have a one-day bounce? Well, the other scenario of the extreme oversold conditions is the fact that the 10-day and the 50-day are pretty separated now. And quite often when that occurs, as I've talked about numerous times, that 10-day moves back to the 50-day moving average. The convergence usually is the 10-day moving, not the 50-day moving. So that could suggest a little bit more of a bounce. A couple other things to look at is the fact that we have this support level there at 420. And that also could be right around where the projection is for the wave 4 if the wave 4 were to begin now. Now, a reminder of that zigzag pattern. Another positive, if you will, for our market bounce is the fact that look at that C wave extension right to the 100% level. We talked about this 392 level. We closed there on Wednesday. We traded below it on Thursday, closed again there on Thursday, and then there's today's bounce. So where do we bounce to? Normally, when you complete a C wave, you go back up to at least the previous fib level, 61.8, which just happens to be where? Right at 420. So another indicator that we could see this relief bounce carry on up to around 420. Then we take another look and see where things could go from there. Thought we'd take a look at the weekly chart. With this move to the downside, you can see the zigzag clearly in the weekly chart as well. And now we're now at a 46% wave 4 corrective move, getting awfully close to 50%. So we could be in an area where maybe over the long term, we could see things move a bit more to the upside. Perhaps in Tuesday night's TradeFinder, talked about the VIX and talked about how I just feel like before the selling is over, and I'm going to go back and look at the SPY chart in a moment, but before the selling is over, I feel like we have to have a spike higher. We did give that boxing scenario. Go back and look at Tuesday night's recording if you haven't seen it, of a puncher versus a boxer, and the fact that maybe the VIX is just beating us to death with this 35 level. But it's my view, just my opinion, that before the selling completely ends, and that could be all the way down here, and as the wave 3 continues lower, that wave 5 target moves lower as well. But perhaps we do come down here with a big spike in the VIX, and that's when we have that cathartic, ugly day with everybody throwing in the towel, and that could be the absolute bottom. But looks like we might get a little bit more of a reprieve bounce before then. Wanted to show you interest rates. They moved back down again. Now notice what's occurred in the chart of the 10-year. So we gapped down on Tuesday, filled the gap on Wednesday, gapped down on Thursday, filled the gap today. But we are working a little bit lower, and the key here is we are below 3% on the 10-year, which should be, you would think, helpful to the markets for a potential continued relief bounce. Now, I wanted to show you the yield curve again, and the reason for that is there was an article in Forbes yesterday questioning the effectiveness of the signal of an inverted yield curve with a recession. You've probably heard that the yield curve being inverted is a pretty good indicator of a coming recession 6 to 12 months down the road. I happen to think that the record of the 10-2 inversion is pretty darn good. The suggestion in that Forbes article was the longer the inversion in the yield curve lasts, the better the signal is. And this inversion that occurred between the 10 and the 2 this time around was very short-lived. Now you can see that we are starting to steepen a bit here in the yield curve, so it is looking a bit better, but I think every scenario has its own merit, every condition. When you have the inversion, right now we happen to have a market that's nearing bear market territory. We're 18% from the high to the low, and 20% is a bear market, so that bear is roaring here. I haven't quite gotten there yet, but it's waking from hibernation, I can tell you that. Looks like we will enter a bear market at some point in the not too distant future. We also have a Federal Reserve just embarking on an aggressive rate hike campaign and withdrawing liquidity. All those scenarios with an inversion, even though it may not have been very long in duration, I think is looking awfully strongly like a good signal of a recession coming in the not too distant future. What are your thoughts? Do you think we're going to be entering a recession? Post a comment underneath this video on whether you think we will enter a recession or avoid a recession. Be interested to know what you think. All right, let's take a look at Bitcoin. You know, it was a really rough week for cryptocurrencies. It was all over the news, and right now Bitcoin is trading right around 29,000, and you can see that we are a bit oversold from the 10-day moving average. We've talked about this numerous times, the levels of 4,000, and so we came down here, and so far at least we've held. Perhaps we get a little bit of a bounce, but we're in a wave 3 to the downside, and it looks like more selling is coming in Bitcoin world, and the charts are pretty similar across the board. Even got Ethereum, which some had thought would hold in there a little bit better. It's trading right around 2,000 at the time of this recording, so a little bit of a bounce up from that closing price. You can see the gap that occurred there. That's just when everything fell apart in crypto land, and boy, as bad as it gets, look at Coinbase. Look at this chart all the way down, and then there's the bounce today filling that gap. But still a tiny bit oversold. But look where we were at yesterday's low from the 10-day moving average, the separation that's occurring there between the 10 and the 50-day moving average. Pretty bloody week for cryptos. All of them are in a wave 3. Perhaps we get a little bit more of a bounce here as well, but it does look like lower lows to come in the crypto land, which I know is much to everyone's chagrin. If we take a look at the US dollar, you can see that, man, it's still staying strong. We had a little bit of a move down today, but that was from overbought conditions yesterday. So we're getting maybe a little bit of a sideways move here. I thought we might stay in a channel a little bit longer than that. I'm really surprised that the dollar stayed this strong. And as you can guess, with the dollar that strong, pretty rough on the metals. Pretty difficult to see the metals bounce with the dollar like that. Now, if we do start to get at least some sort of a wave 4 corrective move in the dollar, that could be what spurs on the metals, and I think that's what will happen. At some point, the dollar will take a little bit of a break, a little bit of a breather, and you can see that with gold here, looking at the GLD, we are not only oversold from the 10-day moving average, but look at the separation between the 10 and the 50. If you've heard my recordings, you know the feelings on no security in any time frame gets very far away from the 10-day moving average, and the same holds true from the separation between the 10 and the 50 in the previous recordings. You can talk about that a little bit more. But there's the ultimate point of support, I think, on GLD around 165, but we're in an area here of major support between 165 and 170. You can see that channel there. So anywhere in here, even where we are now, we could find some support and at least bounce back up towards that 10-day moving average. But seems like the metals are going to catch a bid at some point, but it's not going to be until that dollar weakens just a bit. Looking at the international markets, as I said, going to be a common theme here. A little bit of a relief bounce that occurred today, back up to the 10-day moving average here in Canada. Boy, I didn't expect to see Canada break that 36 level. You can see that right here. Thought that one might hold. It was trying. We kept going back up and bumping our head against that level, trying to get back above it. Couldn't do it. Even had to break down below 35, close below it, but with a doji yesterday, and then there's the bounce back up today. But look, we're just back to 36, and we're just back to the 10-day moving average. So even though there's a little sign that perhaps this relief bounce could last a little longer, we could turn and go back down as well, with the fact that at least we've gotten back to the 10-day moving average. But I am telling you that this will not last. This 10 separation from the 50 in these markets will not last. Now, whether or not it occurs beginning of next week, a week from now, 2 weeks from now, I can't tell you the timing, but I can tell you that this separation is extreme and it won't last much longer. Looking at Australia, gap down there, doji yesterday, moved back to the upside today, not quite back to the 10-day moving average here, but again, relief from extreme oversold conditions, the theme of this recording. India, not much of a bounce here on India, still a bit more oversold on the INDA than we are in some of the other international markets, and you can see that we're down here around this 40 area. That looks like it may want to hold support on the INDA. Notice the separation between the 10 and the 50-day moving average here as well. Now, you may have heard on the financial networks that GameStop and AMC were having big weeks. Well, I thought it might be time to go back and look at meme world and put things in perspective. So yeah, there was a little bit of a bounce towards the end of this week, but look where we are now compared to what happened when we were at the height of the meme mania, if you will. And basically, we're all the way back down to support here on GameStop, down around 80. And you can see that the close got to 98, so that's the bounce they were talking about at the end of the week, where we hit the low around 80, and we just bounced back to the upside from support. I mean, you can see that support. It was resistance back in early 2021 before the big meme craze hit, and so that became support now, and we got a little bit of a bounce there. But again, just a bounce from oversold conditions. So I think it was just something for the financial networks to talk about because it was such big news back when the meme craze was in full effect. And there you go with AMC. Same thing here, just bouncing off support levels and looking at the 10-day moving average, also bouncing off support from oversold conditions. So I think that was just much ado about nothing as far as what was going on between GameStop and AMC. But I thought it was worth looking at because there was so much in the news, and we try to keep things current here in these recordings. So I hope everybody enjoys a great weekend. Be interesting to see what happens at the beginning of the week. Does the relief bounce continue? We'll be back to tell you about it. Take care, everybody.